Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. In today's episode, we are going to be reviewing my 2022 model for Tesla. Now, the reason I'm releasing this now is because I plan on uploading my 2023 and my 2024 models for Tesla in the next coming days on Patreon. So, if you haven't signed up for Patreon yet, feel free to do so. It helps support the channel. You can find the link down below. Now, we're also going to take a look at a couple other tweets that came out recently regarding this whole email scandal. Is it real? Is it not real? Layoffs, all that. So we're not going to spend too much time on it, but I think there's some new, let's just call it developments from media. And so I just want to touch on that real quick. Okay, so before we get into it, do me a favor, hit the like button, hit the subscribe button, ring that bell, and let's find out what Nick thinks for 2022 Tesla stock price. Let's get into it. Here we can see an article that was written with the headline, Elon Musk clarifies his stance on employment. It's growing after all at Tesla. And so here you can see it says Tesla stock tumbled Friday with the biggest reason being confusion over Tesla's headcount based on comments attributed to CEO Elon Musk. So not really comments, he said, a internal email, just to clarify that part. So it goes on to say Tesla CEO Elon Musk answered a key question for investors Saturday afternoon with a tweet. Tesla's employee headcount still is going to rise. Tesla stock took it on the chin Friday. The biggest reason was confusion over Tesla's headcount based on comments attributed to the chief executive. Early in the day, Reuters reported that Musk planned to cut the headcount by 10% because he had a super bad feeling about the economy. Later, Friday, Musk answered a tweet including portions of an email from him that indicated that Tesla was looking to only cut salaried headcount. The article goes on to show, which we can see here, total headcount will increase, but salary should be fairly flat. And this is, again, what they're referring to, Elon responding to a tweet about that article that came out. And so this was Elon Musk's response to it. And the article goes on to say, that's not down like the reports on Friday implied. Tesla's headcount increased by roughly 40% in 2021 as unit sales increased by more than 85%. Investors expect unit sales at Tesla will grow another 50% in 2022 to about 1.4 million units. All right, so again, what they're essentially saying there is that Reuters didn't do their due diligence, they didn't do their homework, and they effed up, is pretty much what they're saying. Shares aren't trading on any exchange on Saturday. Tesla bulls on Monday will be looking to recover some of Friday's drop. Okay, so obviously we all know we essentially took a hit, about 10% hit on Friday over this, honestly, this just BS article that came out without any actual snippet or clip of the email they're referring to, and then boom, everything tanked. And then here we have Elon kind of setting the story straight, but it's, honestly, it's kind of sad that we have to do this, that Elon has to do this. I know a lot of people think that he should have a PR team, a media team, or something to deal with this. But at the same time, where's the onus on media to do good reporting? I mean, I feel like that's half the theme of this entire channel is hoping that one day somebody will hold media accountable for what they do. And maybe that's why Elon is hiring this, DEFCON elite level attorney team that he's attempting to assemble. So I want to show you one last tweet. This is from Gary Black. He says, Tesla, right? TSLA. I expect we'll see some reversal this week now that Elon Musk has walked back to his comments that, quote, Tesla will be reducing salaried headcount by 10% in favor of, quote, salaried headcount should be fairly flat, end quote. I never end quote. I just realized that. Still haven't seen the super bad feeling about the economy email. And that I 100% agree with Gary Black. This is my whole point. This has been my point, right? We see all these leaked emails. Where's that email? All right. So supposedly that happened. And this makes me think that there's some malfeasance going on with Reuters and whatever was happening there. Or somebody just trusted something else they heard or saw, and it may have not been real. It doesn't matter. You're reporters, you're journalists, do your damn job and do it right. Okay, this should not be acceptable. And so I really hope this attorney team that Elon is trying to put together, this I forget how he put it, but essentially going to war. I hope they go after media companies that do stuff like this, because this is defamation. I mean, you wiped out 10% of Tesla. Like, think about that. Like, that's huge impact. Now, again, we don't really care that much about these ups and downs where we think about the long term, but it doesn't matter, because a 10% here, a 10% there, a 10% here, and then next thing you know, our long-term vision is like where we have to make up all of that ground. So it does matter in a way in the big scheme of things. Okay, so with that said, let's put all that noise to the side and let's take a look at my model for 2022. We'll start off over here on the right. These are just some key notes that I made for this. And keep in mind, this is my base case. If you look down here, you can see bear, base, and bull. So we're just going to focus on my base case. If you guys want to see the rest of these, again, you can find the Patreon link down below. But for key notes, just some things to just level set about where my mind is with regards to this base case. So first of all, this base case now reflects a potential of longer than expected Giga Shanghai shutdown in Q2, which is what we experienced, right? Essentially, April shut down. The majority of May saw very limited production, and then hopefully in June we get the ramp up. Okay, so that's one caveat. Next caveat: average selling price for the Tesla vehicles, right? So it was 52,000 in Q4 of 2021. So I anticipate that we'll see 55,000 by Q4 of 2022. Again, keep in mind, this is a 2022 model, not just this quarter model. So I think by the end of the year, we'll see about a 55,000, and I think that kind of comes out into a wash with FSD and things of that nature. Gross margins. So I think for the base case that we take a hit. So we've been seeing 30 to 32% for gross margins, but now that we have to account for China for at least Q2, that'll probably weigh down margins for the entire year. But then we also take account Berlin and Austin, right? So I'm just putting this at 28% for gross margins. Again, this is probably going to be conservative, but I'd rather be a little more conservative with my base case. PE. So for a PE ratio, I have 75. Now, keep in mind that for PE, I have it right here as of May 28th, was about 64. So what I'm essentially saying here is that we need to make up ground, okay? So we essentially need to see that PE move up over the next 6 months in order to hit the 75. So while I'm trying to be conservative in some of the other areas, and, a few months ago or 6 months ago, you would have thought 75 is extremely conservative. This is something that we are actually being a little optimistic about as of today, as of June 5th, I think it is. So that's just yet another caveat to keep in mind. This is before any split happens. So if you're looking at this, in a few months from now, this is pre-split. So if there's a split, don't take that into make sure you split the numbers to take into account for the right number. Sorry, I'm stumbling over my words. And then finally, I'll show you my delivery numbers in a second here, but I'm assuming 46% year over year delivery growth. And the big hit on this is China. So let's scroll down here. Q1, this is in the books. We know what Q1 was, okay? So we know those deliveries. Q2, you can see here, it's red. So this is what's ongoing, it's in progress. Now, Q2, this is extremely difficult to forecast right now, especially with Giga Shanghai shut down for as long as it was. But what I have here is Model 3, Model Y, Model S, X. And I'm not going to go through all of these numbers and how I get to them, but I do want to break down at least for the 3 and Y for Q2, just because that's the real oddball in this whole model. So I had to change a lot of things, and the first thing I'm assuming is that if I open this up, you can see that 57,500 here. Where's that come from? Well, that's coming from Fremont. So what I'm anticipating is that Fremont creates or delivers 115,000 vehicles combined of 3 and Y. Okay, so before the S and X, that's what I'm anticipating. And so all I did was essentially cut that down the middle, right? Let's just say it's 50-50 between 3 and Y. Okay, so then if I come back here again, then we have 36,000. So where's this 36,000 coming from? Well, again, Shanghai in June, right? I'm working backwards here. Shanghai in June, I anticipate them being at 72,000 for that month. And so if you take that 72,000, you split that in half, that puts 36,000 for Model 3, and we'll also have 36,000 for Model Y. All right. Now, if we continue Shanghai here, from May 19th to May 31st, I'm going to assume that they were able to do 2,200 vehicles a day, okay? And that's what was reported. So that's what I'm going to go with here. And so that comes out to an additional 24,200. Divide that by 2, that gives us our 12,100. Come down here, Shanghai in May. From May 1st to May 19th, we were being told that they were doing about 1,000 vehicles a day. So what does that give you? A total of 19,000. Hence why up here we have 9,500 vehicles, right? So that's that if you add that up, that gets you to your 19,000 between the 3 and the Y. Okay, so now that's everything for the Model 3. So if we go here to the Model Y, why is this slightly higher? You can see this has an additional 10,000, and down here, this is essentially where I anticipate Austin and Berlin in aggregate did 10,000 vehicles. Again, it's the beginning of the ramp. I definitely think Austin's going a lot slower than we anticipated, mainly because of the 4680 batteries. I think that's going to be the limiting factor for a little bit here. But I think Berlin is actually starting to ramp up a lot faster than what many probably anticipate. So again, 10,000 here should be fairly conservative. So what does that look like for the quarter for Q2? That puts us at 254,700 vehicles delivered. Now, this is potentially optimistic. Okay, I just want to level set here. Q2 may be very, very bad. And I think a lot of analysts still haven't brought down their delivery numbers for Q2. I'm still looking for that. We need to see those numbers come down, because if they don't, it's going to just be an artificial miss for Tesla for the Q2 numbers. So keep an eye out for that. Now, when we aggregate Q1, Q2, Q3, Q4, all the deliveries, what I'm anticipating is just under 1.4 million vehicles. Now, I know that doesn't sound like, the crazy 1.8 million vehicles many people thought we were going to possibly see this year, right? Some people even say maybe 2 million. Look, I don't think we're going to get there. All right. I think Berlin and Austin are ramping up slowly. Shanghai had that shutdown. So at this point, I think just under 1.4 million for a base case. Keep in mind, it's base case. I think that's going to be fairly solid. So if we come up here, again, you can do all the math if you want. It's fine. And pardon me for all of the decimal places. I haven't changed this one yet, right? On my 2023 and 2024 models, I'll have this a little more refined without so many decimal places, but bear with it for right now, okay? I just want to share this with everybody. But so you can see what the average selling prices are here. And again, this is pretty conservative, I would say. And you can see that I had over here the 55,000 was the assumption for average selling price. And here you can see in total it comes out to just over 55,000. So that's where those numbers come from. Gross margins, like I said, 28%. You can see your gross profit here, and we can see what the total comes out to. Energy is one that I haven't really been modeling, to be honest. I've pretty much kept energy the same, whether it's in the bear or the bull. And I'll probably do the same for 2023 and 2024. The reason being is we're not seeing meaningful progress yet from the energy. And I'll show you how energy really doesn't have much of an impact just yet when it comes to Tesla. So if we go to total gross profits, if we assume 25% for expenses, we take that out and we get our net profit. All right. So this is essentially what Tesla gets to take home. So market cap. All right. So market cap with a PE, and look at this. We always find little mistakes. Lots of numbers to put in here. So we'll put that as 75 because that's what I had anticipated up here. If you recall, right, 75. Again, keep in mind, we're currently at 64. So if I come over here to the market cap again, if I open this up, you can see I have my 75 here. You can see the equation there. And that gives us a stock price of $1,239 by the end of 2022. Now, this may not sound too impressive to any of you. Again, keep in mind this is my base case, but you have to remember what we have just gone through. All right. I mean, well, let's finish this up first, and then I'll caveat everything. So I just wanted to just talk again real quick. If let's say that I were to completely zero out energy, right? We would still be sitting here at $1,200, right, by the end of the year. So the energy really has no real impact, all right? It's a matter of about $30 on the stock price. So ignore that. But yeah, $1,200. I think that's a pretty good stock price to anticipate for 2022. Now, again, as I was mentioning, let's talk about what we've gone through. All right, we went through the whole Fed starting off by changing their terminology from things are transitory to they're not transitory, and we dealt with all of that drama, right? And then come February, we had Russia invade Ukraine. That had yet another impact. And then we had all of the oil stuff going on, right? Energy prices going to the roof. And then we had essentially Giga Shanghai having the lockdown, which, if you thought supply chains were burdensome before, throw in yet another lockdown for Shanghai, and boom, all of a sudden Tesla Gigafactories are closed. Then you have Elon selling, right? Elon sold in November and December, and then Elon sold again to purchase part of Twitter, which leads us into the Twitter saga, okay? So then we had to deal with all of that drama going on. And now recently we have the drama with regards to these emails, the economy, Elon Musk apparently saying that, we're in big trouble and all this stuff, and the headcount, and just, all the FUD that we've talked about a lot at this point. So all of that going on, Andre Karpathy going on a sabbatical, people are freaking out about that. I mean, there's just so much that has gone on in this first 6 months of 2022. It's been quite amazing, really, to take a step back. It's been painful, and it's been, atrocious to watch and to be part of. But it's honestly kind of remarkable to think about all the stuff that we have endured over the last really 7 months, because all this really started in November. So really, it's been about 7 months. So I think, if right now we're at $700 a share, if we can go from $700 a share to $1,200 by the end of the year, I think that would be amazing. That's essentially a 50% jump, all right? And on top of that, keep in mind, that's only a 46% year-over-year growth for Tesla. So just want to share that with all of you, show you where my head is at, what I'm seeing. Now, the beauty of these models is that as each quarter happens, I update the numbers for deliveries, and that can change everything, right? Now, I don't think it'll change things that dramatically unless Giga Austin, Giga Berlin really start going full throttle. But I think that this is pretty accurate. I think this is pretty much what we're going to see. Now, keep in mind, just because I have this as what the stock price should be, doesn't mean it will be, okay? The stock market and the company are just two separate animals, all right? Right now, I don't think it should be at $700. So, that just says everything. So just because I have this as a price target doesn't mean it has to happen, right? For all we know, we could sit here at 700 for the next 2 years, and then all of a sudden we run up, just like what happened in 2019, 2020. So be prepared for something like that. But with that said, I hope you guys enjoyed this. I hope this episode showed you a little bit about how I like to model these out. Again, I plan on releasing my 23 and 24 model on Patreon with the bull, with the bear, with the base, all of that, right? A lot of time goes into these. So if you guys want to see that, find the link down below and you can join our Patreon. All right, we're going to leave it there for today. I hope you guys enjoy the rest of your weekend. I love you all. Peace.